Welcome to Las Vegas, everybody. Day one BPCON.
Day one BPCON.
What are you hoping to get? What are you hoping to get today?
You know what? I'm hoping to get a good insight in regards to state of the market from Dave Myers, the BPCON, the economist for BPCON, and everything else like that. Really some big time networking with just real estate investors, seeing what kind of projects people are working on, what kind of projects they want to invest
What deals
in.
are people doing right now?
What deals are people doing?
Seriously,
right now?
I mean, the
Absolutely.
deals are hard to come by, so what are people doing, right?
Exactly.
Chris, what do you want to get today?
Oh, I want to make some new friends.
You don't have enough friends?
I don't never have enough friends.
Oh,
Never have enough
yeah.
real estate investor friends. I want to make some new friends, see what they're up to, learn how people are getting stuff done.
And I am looking to talk to people about raising fund of funds, like sub-funds, sub-LLCs that invest either in DeRosa projects or in projects of their own. So I'm going to look to meet some people that are looking to do that or already doing it now. Let's get going.
Sounds good.
Who here has already raised over $1 million? Today we're going to talk about just how to raise capital, also how to manage it, and how to get well beyond $1 million, because $1 million should not mean it is a good milestone, it's a good place to reach towards, but it by no means should be a stopping point for anyone. Once you build a machine to get to $1 million, that machine will get you to 10x or 20 or 100x very quickly. Who here believes that they don't know enough people to raise $1 million? Turn yourselves in, hold them high, okay? It's a common misconception, right? I've had a lot of people tell me, I don't know anybody that has money, okay? Well, that's good you're not looking in the right place. And if it's true that really no one in your network, no friends, no family, nobody has any money, there's a common life mantra that you become the average of the 5 people you hang out with. If it is true that no one you're hanging out with has no money at all, you got the wrong people around you, and go make some new friends here at this conference, okay? So, all right, raising private capital is about a lot of the money that you need is all around you already. Raising private capital is about the money that you need is already in your cell phone, and it helps you unlock it. Most investors in our network believe that the only place for them to get wealthy is where? Stock market, Wall Street. That's the only place where they can get rich, right? It's the only place to invest, right? That's what they think. And it's our job to educate them that that's not true. That's transforming lives through real estate that we all can do as capital raisers. This is the one that I want you guys to focus on. You're going to sit and make a list of about 30 people that meet this equation, okay? Everybody think of somebody right now in their life, in your primary contacts, okay, that used to work at this job and now works at that job. Somebody that used to work here and now works there, okay? You guys got it? Who's thinking of somebody right now, okay? Got it. That person, the job they used to have, the 401k that was there, that retirement account, is now an IRA. Anyone that used to work here and now works over here has the capacity to invest with you through their retirement account. Except your mother, your grandfather, your grandparents, your parents, and your kids. Directly above you, directly below you in a family tree. They're called disqualified parties. Sorry, I didn't make up the rule, but they can't invest with you. Other than that, right, your siblings can, your cousins can, all those folks can. It's somebody that used to work here and now works there. That's it. We all know somebody that did that. America transitions their jobs around once every 7 years, right? This is where the $10 trillion in possibility comes from. You have a tax shelter, right? You can take the money and grow it here, right? You can grow it as big as you want, and not until you turn 65 or even 72, you can grow it as much as you want in there. And then when it comes time to take it out, then you have to pay tax on it. But you can grow it tax deferred inside that vehicle. Here's a free tagline that'll make you guys $1 million by itself. Put this one on Facebook. What if I could double up money you didn't know you had? Right? Because most people in your network don't even know that the IRA money is sitting there. They forgot about it, right? Oh yeah, there is 200 grand sitting there in that IRA account, right? I cannot tell you how many times I've had these conversations with folks, right? Yeah, that money's been sitting there for years, isn't doing much, right? they forget about it. They know how much is in their 401k because it's in front of them. It's relevant. They see it coming out of their paycheck. But they forgot about the IRA that on the job they left 10 years ago, right? What if I could double up money you forgot about, right? That's your tagline. Use it. You don't even have to give me any credit for it. It's yours now. Those are how to find it and how to close private money, okay? When you're talking to passive investors, what do you think the most common question that they're going to ask, or the question you have to answer for them before they're willing to invest with you is? Why real estate, guys? They don't know, right? You have to remind them, for those that are not passive, that they're not already the savvy investor, even the savvy investor needs to get reminded. Why real estate? Tax consequences, like tax preservation, wealth preservation, cash flow, right? Stability, the stability of sticks and bricks, fighting back against inflation. All those things are all good reasons of why real estate, okay? I'll roll through these now. Why the town that your property's in, right? Like why, I don't know, Las Vegas? Like why, Louisville, Kentucky? Why, Fayetteville, North Carolina? Whatever it is. Why that market? Why that deal, like cash on cash and everything like that? And why you? Typically in that order. Talk to them about why real estate, why it's amazing, and why it's something they should have in their portfolio. I talked to you guys about getting to your first million, okay? I'm going to break it down for you guys. Now, this is not the only way to do it, okay? And there's other ways to raise a lot of money for deals, but this is how to get to $1 million portfolio. For a lot of you guys that are just getting started, this is the way to do it. This is if you're just getting in, if you haven't done any real estate deals yet, or if you've done a couple and you want to scale, and you can pick this up about halfway through the cycle. I'm going to give you guys a step-by-step method on how to do it and how to achieve at least $1 million in assets under management. Not sexy, but it's okay. This is buy yourself a small multifamily duplex, triplex, quadruplex. I did this before it was called a house hack. It was just back then, it was just called getting roommates. And so I moved into a single family home, 3-bedroom, 2-bath, had 2 of my buddies move in, and the rent they were paying exceeded the mortgage. Hey, you guys can do that, but I recommend if I had to do it over again, I'd done a duplex, triplex, or a quadruplex, because you can get very low interest, very high LTV, high loan to value mortgages for properties that you're going to live in. Live in it, house hack, reduce your expenses, squirrel away some money, renovate and raise rents in the property to build up some equity, okay? This, guys, is your first case study. If you have not documented all of the real estate deals you've done, by the way, when you start raising money, people are gonna Google you, okay? So Google yourself. Google yourself. You might not like what comes up. Google yourself, okay? And find out what comes up. And if you don't have a website that you can put deals that you've done on, including a house hack that you did, then start to do that so that your track record's captured. You guys should be doing photos, videos of all the deals that you've done so you can point to stuff. Even if you want to grow into self-storage one day and you're doing little single-family home renos, it's okay. It's still experience. It's still learning. You're still doing the reps, okay? So build up equity and paint the story of the track record you're creating for yourself, okay? All right. Equity becomes momentum, guys. Once you've built up a little bit of equity in the property, I'm a big fan of HELOCs, as Cal can tell. Me picking on him, we'll get you one, buddy. I'm a fan of HELOCs because it unlocks the equity, puts it to work. I've got it on most of the properties that we control personally. We have some sort of a line of credit that I can put into something else. So then you're going to lever up, and you, maybe with a couple of investors, can take the HELOC from the first property and level it up and get yourself into a couple more deals, the 8 to 12 units, like take the lessons you learned in renovating the house hack you did into some bigger stuff. Then you partner up for scale. This is where, like for me, my big deal was a 10 unit that I bought, and I raised like $200,000. I thought it was like lifting a Volkswagen over my head is what it felt like I was doing, because it was like the hardest thing ever. Now it's very easy to do. Like it was a stretch, right? So do a stretch deal as you guys grow. A good stretch goal for all you guys to have as you guys build your businesses is to double your portfolio every time you do a deal. It's not sustainable forever, but until you get to at least 100 units, you guys should be doubling your portfolio every time you do a deal so that you're stretching yourself, you're pulling yourself in new circles, new investors, new brokers. You're not getting at like a comfort level, you're stretching and going up for the next rung on the ladder, okay? And that, you double up quick, right? No, I only have 8 units, great, double up. You're 16, then double up again. Do a 32 unit deal, do a 64 unit deal. Before you know it, you're off to the races, right? So by the time you've gotten to this point, you will have documented a lot of your track record, your progress. You can point to a lot of things that you've done. This is the organic path up. Here's the secret of capital raising, really, okay? This is like once you've done some deals, this is how it scales up in hockey sticks way beyond $1 million, okay? This is the secret. What you're gonna do is you're going to build a big group of eyeballs on you through some sort of a magnet. That's either a podcast, social media posts, YouTube videos, great articles written. J. Scott does if you guys aren't following J. Scott on Facebook, he does really, really good analyses of what's going on in the economy. He's doing it partly because he's a nice guy, but also partly because he knows it's a good magnet to get attention to him and his company and everything like that. That's just what it is. So what can you do to get eyes on you in a positive, enlightening way? These are people that are curious about what we do. These are people that maybe are giving us some of their attention, okay? Then you're going to create some sort of a means for them to consider investing with you further. The top of that funnel's like this is consideration, evaluation, then getting them done to close, right? That's what funnels really are. It's wide and then it goes narrow, okay? So the way you do this is if you're gonna go on a podcast, make sure you say, oh, here, my website is, abc.com or something like that. You're gonna have a means for people to find out more about you. Make yourself Googleable, right? That's the way that when people find you in the outlets that you do, whether you're speaking on stage at a conference or running a RIA, or I can keep doing that. Like I probably make a list of 30 things you guys could do to get those orange people following you. Then you've got to do things to have them get to know more about you. Mostly that's websites and things like that. Then it's also tools like CRMs and everything like that that help you process these folks and help you weed out the people that really are just being looky-loos and just being curious. And then there's people that are really like to hear your thesis, like to hear what you have to say, and are really engaged and want to consider working with you further. Then you've got a real short list of real prospects. This is where you have a webinar, talk about deals. Webinars are incredible vehicles for closing capital. Almost all of us use them on a regular basis. So when you've got a reasonable following and an email list, start doing webinars. Even if you don't have a deal to pitch, start doing webinars to see how many people come out to talk about what it is you have to say, okay? This is the funnel, okay? Then you go and you convert to dollars. And as you as a capital raiser are tweaking this, you'll see that the more of segments of this, the more of these little orange folks you can get here to show up, to hear what you have to say, the tighter you can make this funnel. We found at DeRosa a couple of years ago, our funnel was leaking a lot. People that were coming in just weren't getting touched, they weren't getting the proper emails, all those kinds of things. So it's a regular maintenance of all these systems in your capital raising game that will take this way beyond $1 million, right? This is the architecture of the system. This is what it looks like as you guys get to the next level and everything like that.